Hey there, listeners. Ready to jump into the wild world of crypto? In this deep dive, we're going to break down how to build a killer crypto portfolio. So you can invest like a pro. We've got some awesome resources lined up. We'll be comparing Bitcoin to digital gold, diving deep into those altcoins, and even exploring those fascinating stablecoins. And the best part, we'll tailor this whole thing to your risk appetite, whether you're feeling conservative or ready to ride that crypto roller coaster. To help us make sense of it all, we've got our crypto expert here with us, ready to get started.
Absolutely. Cryptocurrency is such a dynamic and exciting space, always evolving, and I'm happy to help you navigate it all.
Okay, let's unpack this. The first thing that jumps out from our sources is, figuring out your investment goals. Like, what are you actually trying to achieve with your crypto investments? And then there's risk tolerance. It's like figuring out your financial personality before hitting the crypto dance floor.
Yeah, totally. It's crucial to define what you want to achieve, and just as important, how much risk you're comfortable taking on.
Right. Are you in it for the long haul? Like investing in a promising startup, hoping it becomes the next big thing? Or are you more about those short-term gains, even if it means a wilder ride with more volatility?
Exactly. It's all about finding that sweet spot between stability and, that juicy growth potential.
And that's where understanding your risk profile comes in. Our sources talk about three main profiles: conservative, moderate, and aggressive. Can you break those down for us?
Of course. A conservative investor is someone who really prioritizes protecting their capital, like someone who prefers low-risk investments. They're happy with that slow and steady growth. Then you have the moderate investor, a bit more adventurous, willing to take some calculated risks for potentially higher returns. And then there's the aggressive investor, much more comfortable with high-risk, high-reward ventures.
So it's like choosing your adventure level in a video game. But one thing that all our sources agree on, no matter your risk level is, never invest more than you can afford to lose.
Couldn't agree more. That's the golden rule of investing, especially in a volatile market like crypto.
Okay, so we've got our financial personality figured out, and we're ready to play it smart.
Mm.
But to build a killer crypto portfolio, we need to know what we're actually investing in, right? Our sources break down the different types of cryptocurrencies into several categories. What's the best way to think about these categories?
Imagine you're building a house. You need a strong foundation, some sturdy walls, and maybe some fancy features to really make it your own. It's the same with your crypto portfolio. You want that mix of different types of cryptocurrencies to balance that stability, growth potential, and yeah, maybe even a little bit of speculation.
Love that analogy.
Yeah.
So where do we start with this crypto house? What are the foundational elements? What are the blue chips of crypto?
The blue chips, those are the established giants, right? The ones with proven track records. Bitcoin, often called, digital gold, it's like the bedrock of your foundation. It's the first and most well-known cryptocurrency, known for its limited supply and store value properties. And then you have Ethereum, the platform that revolutionized the industry with those smart contracts.
Now, I've heard a lot about these smart contracts, but to be honest, never really understood what they are. Can you, shed some light on that?
Sure. A smart contract is like a self-executing digital agreement. It automatically enforces the terms of the contract, cuts out the middleman like lawyers or banks.
So that's incredibly efficient. It's like automating trust and transparency. So Ethereum, with its ability to run these smart contracts, it's like a powerful platform with huge potential.
Exactly. And that's why it's considered one of the blue chips, right up there with Bitcoin.
Okay, so blue chips are the foundation. What's next? What about those altcoins I keep hearing about?
Altcoins, or alternative coins, are basically any cryptocurrencies that aren't Bitcoin.
Okay.
They represent a huge, diverse ecosystem of projects tackling all sorts of problems. You'll find ones offering unique features within this world. And then we have mid-cap altcoins, kind of like the sturdy walls of your crypto house.
So not quite as established as Bitcoin and Ethereum, but they've got solid potential, right?
Yeah, you got it.
Can you give us some examples of these mid-cap altcoins? What makes them stand out?
Absolutely. Cardano, for example, is known for its focus on sustainability. It uses something called a proof-of-stake consensus mechanism, which requires way less energy than Bitcoin's proof-of-work system. This makes it appealing to investors who are, conscious of the environmental impact of cryptocurrencies.
That's cool.
Then you have Polygon and Solana, both known for their fast transaction speeds and low fees. They make them appealing for developers and users.
Got it. So it's all about choosing altcoins that align with your goals and values. It sounds like a whole world to explore beyond Bitcoin and Ethereum. But I'm guessing these altcoins also come with higher risk.
That's right. While mid-cap altcoins offer that exciting growth potential, they're definitely more volatile than blue chips.
Right.
That's why it's so important to do your research. Understand the underlying technology, team, and use cases before investing.
Makes sense. Speaking of risk, our sources also mention emerging cryptocurrencies, often called small cap coins. These sound like the high-risk, high-reward investments of the crypto world, like venture capital.
Exactly. Think of these as the venture capital investments of your crypto portfolio. Early stage projects, maybe unproven track records, but massive potential for growth.
So like investing in those startups, that could be the next Google
Mm-hmm.
or completely disappear. Exciting, but definitely risky. Can you give us a taste of what these emerging cryptocurrencies are all about?
Sure. Optimism and Arbitrum are tackling those scalability challenges of Ethereum, trying to make transactions faster and cheaper. Gala is building a decentralized gaming ecosystem, letting players own and control their in-game assets. Just a couple examples of the amazing innovation happening in this space.
Wow, it's incredible how much creativity is driving this crypto world. But I imagine these small cap coins require a ton of research and due diligence.
Absolutely. Investing in those is not for the faint of heart. Thoroughly research the project, get to know the team, understand the technology, and of course, the potential risks.
Okay, so we've got our blue chips for stability, mid-cap altcoins for that growth potential, and those emerging cryptocurrencies for the adventurous types. But wait, our sources also talk about stablecoins. What are those all about?
Stablecoins are like that safe haven within the crazy crypto storm, designed to hold a stable value, usually pegged to, a fiat currency like the US dollar.
So they're like the calm in the middle of all that crypto chaos.
Yeah, they offer a way to protect your portfolio from those wild price swings that can happen.
It sounds like stablecoins could be a valuable part of a balanced portfolio, especially for those who are, more risk averse.
Exactly. They let you preserve capital, reduce that volatility, and even take advantage of dips in the market.
Okay, that's making more sense now. We've got our blue chips, our altcoins, and our stablecoins. But wait, there's one more category in our sources. Sector-specific tokens. What are those?
These are kind of like specialized tokens, ones that focus on specific sectors within the crypto world, like niche investments.
So it's like taking your crypto investing to that next level, focusing on areas you're interested in.
You got it. You have tokens for gaming and the metaverse, decentralized finance, DeFi, and even energy and sustainability.
Okay, wow, we've covered a lot. We've got our blue chips for stability, those mid-cap altcoins for growth potential, those emerging cryptocurrencies for the adventurous, stablecoins for stability, and then those sector-specific tokens for those niche investments. That's a lot to choose from. But how do we actually put all this together into a real portfolio? Like, how much of each category should we hold?
That's where portfolio distribution strategies come in. That's what we're going to dive into next. Ready to build your dream crypto house?
Absolutely. Let's get strategic. All right, we've explored all those different types of cryptocurrencies out there, from those foundational blue chips to the high-risk, high-reward emerging projects. Now let's talk strategy. Portfolio distribution. Our sources give some awesome guidance on how to actually spread out your investments. What's the best approach here?
It all comes back to, like we said, your risk tolerance and those investment goals. Remember those investor profiles. Conservative, moderate, aggressive. Each one has a different approach to how they spread things out. Let's start with that conservative investor.
Okay, so let's say I'm that investor, the one who loves bonds and is, a little risk averse. How should I be thinking about this whole crypto investing thing?
For someone like that, the key is stability, protecting that capital. Imagine a portfolio that's kind of like a retirement fund, aiming for that slow and steady growth over time.
Makes sense.
Our sources recommend putting about 60% into those blue chip cryptocurrencies, like Bitcoin and Ethereum. That provides a solid base, helps you weather those market storms.
So it's all about building that strong core with the established players in the crypto world. What about the other 40% of the portfolio?
Well, remember those stable coins? Great way to further reduce volatility. For a conservative investor, putting around 30% into those, like Tether or USD coin, can provide a nice cushion against wild price swings.
So it's like having a safety net built right into your crypto portfolio.
Exactly. And for that last 10%, you could consider dipping your toes into those mid-cap altcoins. Add a touch of growth potential.
Okay, cool. A balanced approach for, those who like to sleep well at night. What about that moderate investor, someone who's willing to take on a little more risk for hopefully bigger returns?
Yeah, for those folks, it's about that balance, right, between that stability and growth. Imagine a portfolio like a balanced mutual fund.
Okay.
Our sources suggest allocating around 50% to those blue chip cryptocurrencies. Still a decent chunk for stability, but a bit less than the conservative approach.
Right, so still building on that solid foundation of Bitcoin and Ethereum, but branching out a little more. What about the other half of the portfolio?
Well, for a moderate investor, we can up that allocation to those mid-cap altcoins to around 30%, allowing for more exposure to those projects with a bigger potential.
Adding a little spice to the mix. What about stablecoins? Do they still matter in a moderate portfolio?
Absolutely. Still important for managing volatility, even for those moderate investors. Our sources suggest putting around 20% in those stablecoins, giving you a buffer against market swings.
Ah, so it's like having some dry powder ready to go when opportunities pop up. Makes sense. Now let's talk about those thrill seekers, those aggressive investors. How do they do things differently?
Well, for those folks, it's all about maximizing growth potential, even if it means higher risk. Picture a portfolio that's like a venture capital fund, investing in startups that could skyrocket.
Right.
Our sources recommend about 30% in blue chips, just enough for that base level of stability.
Okay, so acknowledging that foundation, but shifting the focus to those high growth opportunities.
Exactly. For someone aggressive, the bulk, about 60%, would be in that mix of mid-cap and small-cap altcoins, the ones with that potential for massive returns.
So it's like diving headfirst into those altcoins, embracing that volatility.
Right. But remember, high potential comes with high risk. They need to be prepared for possible losses. And even with a high risk tolerance, stablecoins can still help manage that volatility.
Got it. So even the most aggressive investors should have a little bit of that stability in their pocket. Now, let's shift gears a bit. Say our listener is ready to start building. What tools do they need to actually make this happen?
Well, first, got to track those investments, monitor how they're doing. That's where portfolio tracking apps come in. Think of it as your crypto dashboard, giving you those real-time insights.
So like having a personal financial advisor just for crypto, available 24/7. What are some good apps out there?
Our sources recommend some popular ones. CoinGecko and CoinMarketCap are great for checking those prices, market stats, and trends. And for real-time monitoring of your investments, Delta and Blockfolio are great choices.
Okay, got it. So we can track our portfolio, but how do we actually buy and sell those cryptocurrencies?
You need an exchange. An exchange is like a marketplace where you buy, sell, and trade cryptocurrencies.
All right, got to make sure those investments are safe and the platform's easy to use. What are some good exchanges out there?
Binance is the biggest globally, offers a wide range of cryptocurrencies. Coinbase is popular, known for being user-friendly. Kraken and Bitfinex are good too, especially for experienced traders looking for more features.
So many choices. It's like stepping into a crypto marketplace.
Exactly. Do your research, compare, and choose what suits you best.
Okay, so we've got our portfolio tracker, our exchange. Anything else to manage our crypto safely and effectively?
Wallets. Super important. It's like a secure vault for your crypto asset.
Ah, right. The digital equivalent of a treasure chest. Our sources talked about different types, right?
Yeah, there are hot wallets and cold wallets. A hot wallet is like your everyday wallet. Convenient for quick transactions, but maybe more vulnerable to theft. They're connected to the internet, so easy to access and use. Some popular ones are MetaMask and Trust Wallet.
Okay, so hot wallets are like keeping some cash in your pocket for everyday spending. What about cold wallets?
Those are like a high security vault, maximum protection. They store your crypto offline, usually on a hardware device, making them much harder to hack.
So cold wallets are for ultimate security, especially for those big long-term holdings.
Exactly. If you want security above all else, go cold. Ledger Nano S and Trezor are popular options.
Got it. So we've got our portfolio tracker, an exchange to buy and sell, and a wallet, either hot or cold, to keep it all safe. That's quite a toolkit. But building the portfolio is just step one, right? How do we make sure our crypto investments stay aligned with our goals?
That's where portfolio maintenance comes in. Ready to learn about crypto gardening?
Absolutely. Let's get our hands dirty. Okay, we've built our crypto toolbox. We know what kind of investor we are. We've got a sense of our, ideal portfolio. But like you said, it's a garden. Got to tend to it, right? So where do we even start?
Exactly. Building that portfolio is just the beginning. Now, it's all about making sure those investments stay aligned with your goals. The market's always changing, right? And that's where regular monitoring comes in.
So how often are we talking? Do I got to be checking this thing every day, or can I relax a bit?
You don't have to be glued to those charts every second. But our sources recommend checking in, at least weekly or monthly, just to see how things are moving.
Yeah.
Are there any big changes in the value of your holdings?
Okay, so just regular checkups keep a pulse on our crypto health. But what happens if things start getting out of whack? Like, what if Bitcoin suddenly takes over my portfolio more than I planned? What should I do?
That's when you need to rebalance things, like pruning those overgrown branches in your garden.
Right.
Keep things in harmony.
Ah, so rebalancing is like hitting the reset button, making sure our portfolio still matches our strategy. What about those stablecoins? Can they be used for, like, ongoing portfolio management?
Definitely. Stablecoins are kind of like your emergency fund in crypto. Having some on hand lets you jump on those opportunities if the market dips.
Ooh, I like that. Stablecoins are more than just stability. They're about being strategic. But let's not forget risk management. How do we protect ourselves from losses, especially in a market this volatile?
Great point. Our sources emphasize using stop loss and take profit orders. You can set these up on exchanges. They're like automated triggers to buy or sell if the asset hits a certain price.
Okay, so it's about setting boundaries for our investments, staying disciplined.
Hmm.
And of course, that golden rule still applies, right?
Absolutely. Never invest more than you can afford to lose. Don't get caught up in the hype.
Right. Our sources talk a lot about DYOR. Do your own research. Why is that so important?
DYOR is crucial, especially in crypto. Don't blindly follow what others say. Take the time to really research a project, understand the technology, the team, how it's going to be used, and of course the risks.
So it's like being a crypto detective.
Exactly.
Where do we even start with that research?
Lots of resources online. Websites like CoinDesk and Cointelegraph offer news and analysis from experts. Communities like Reddit and Twitter can be helpful, but always be careful with those. And of course, read those white papers.
Wow, so much to learn. It's like a whole crypto library out there.
Hmm.
But speaking of potential pitfalls, our sources also warn about FOMO, that fear of missing out. How can we avoid that emotional trap?
FOMO can be powerful, especially when prices go crazy. But remember, not every project is a winner. Stick to your research, stick to your strategy, and don't let those emotions take over. If you're feeling pressured, step back, take a breath.
Stay grounded. Don't get caught up in the hype. Our sources also talk about scams. What should we be looking out for?
Right, most crypto projects are legit, but there are scams out there. Be wary of projects with, anonymous developers, teams with no experience, or unrealistic promises. Always be cautious if a project pressures you to invest quickly. Trust your gut. If something seems off, it probably is.
So it's all about trusting our instincts and doing our homework. We talked a lot about diversification within our crypto portfolio. But I imagine diversifying across different asset classes is important too, right?
Absolutely. Don't put all your eggs in one basket. Think stocks, bonds, real estate, even precious metals. Spread things out to reduce risk.
Like building a whole financial ecosystem. And finally, our sources emphasize continuous education. Why is that so important?
Crypto's always changing. New technologies, new trends. To stay ahead of the game, you got to keep learning. Read those books, follow those blogs, listen to podcasts like this one, and never stop.
Wow, this deep dive has been amazing. We've covered so much. It feels like we've earned our crypto investing badge. What a journey.
It's a lot to take in, but remember, slow and steady wins the race. Start with those basics, build that solid foundation, and gradually learn more and invest more as you go. The crypto world's full of possibilities.
Couldn't have said it better myself. And if you ever need a refresher, you can always come back to this deep dive. Now, as we wrap up, I've got one last thought for you. What type of cryptocurrency project would YU be most excited to research and maybe even invest in? Think about the problems that need solving, the technologies that get you fired up, and the future you want to be part of. Explore those projects, see where it takes you. Until next time, happy investing.